Good morning, welcome to this weekend general update for the 21st of October. And we had a very strong week in Australia in the week just gone, and we're certainly outperforming the rest of the world at this stage. So things going fairly positively in Australia. There was a bit of a pullback in the US on Friday night, but to me it shouldn't have too much impact on our market. Just a general advice reminder about the nature of this video. Now, just a quick weekly summary. The S&P index ended up rising by 5 points, but Friday night was not a good night in the US, but that was largely about Google and Microsoft, and we actually saw some sectors of the market actually do reasonably okay. It was technology stocks that largely dragged the index down. We're looking at support around about the 1420 mark, and we're not very far away from that at the moment. And then the next support level is at 1395. The ASX 200 index had a really strong week, 85 points higher, and that was certainly the resource stocks kicking in the latter half of the week. So a major comeback there. Let's have a look at a few charts. So we'll start with the US dollar index, and you can see we had a sell-off in the early part of the week in the index, and then we had a recovery over the last couple of sessions. So the US dollar index, big picture, I believe is heading down. In the shorter term, it's really just consolidating the recent run down that we had, and I think that'll probably renew itself to the downside in the not too distant future. Turning to the S&P index, you can see we had a very good recovery Monday, Tuesday, Wednesday. 3 very strong days, came well and truly back into this trading range. We had some support at 1440. It dipped a bit below that, but then a sudden turnaround on Friday night. But just looking at the fact that it wasn't all sectors participating suggests to me that this is just technical and probably temporary. So let's have a look at some of those other sectors. This is the banking index, the S&P 500 banks. So you can see they were down a little bit on Friday night, but closed well off the lows. So really the banking index had a sharp fall the previous week, but really didn't do a great deal over the last week or so. Let's have a look at the small caps. The Russell 2000 ended up not doing anything on the week, but basically gave back all of their prior gains on Friday night. Turning now to the Australian market, the ASX 200, you can see we finished the week in really powerful fashion. 3 very solid up days. We're up above 4,500 now, and we've confirmed that. I don't tend to look at the overall index too much because it's really just a barometer of about half a dozen stocks, so it doesn't really tell you a great deal to my way of thinking. But you can see our index well and truly overbought at the moment, and the strong performance was despite the fact that banks pulled back. Our banks had a bit of a fright with NAB significantly increasing their provision for bad debt in the UK, and that tended to drag the banks down, but the resources were so strong that they more than offset that. Now let's have a look at some actual sector charts. And the first one I want to take a look at is just the materials index. So that's largely BHP and Rio against the banks. Now you can see the banks had a great run, but did give some of those gains back right at the end of the week, whereas materials definitely now on the upswing, and I think we might see this gap close as a bit more confidence about China comes back into the market. Now this is the other sector index that I wanted to take a look at. We've been looking at this one each week. We've got healthcare at the top, still going great guns. Telecoms also doing well, and the banks third in line there. But we've seen energy and materials here at the bottom, the two red lines, are starting to play catch up, and they've almost got back now to the ASX 200 line. So you can see basically all the sectors still moving to the upside, but energy and materials starting to catch up. Now let's have a look at the US dollar. We did look at no net gain on the week. Bond yields, Spanish bond yield dropped a little bit further down to 5.37, and gee, it wasn't that long ago that this was above 7, and that's why a lot of the fear has gone out of the stock market, because people aren't worried now about the euro falling apart. Italian yield was also above 6 not that long ago. We're now down to 4.77, so certainly things in Europe in the bond market are improving. Gold declined by a further $28 on the week. We had a sharp sell-off on Friday night as well. 1717 is a likely support area. 1668 is possible. We'll have a look at that on the chart in a minute. And silver declined below the first support level, so a bit of sharp selling in silver. So a move below $31 is still possible. Copper eased a little bit, not too much, just down to 363, and oil has just been fluctuating in this range between 88 and about $93. There's the spot copper chart. So you can see we certainly did lose some ground in the last couple of days of last week, but I'm not too concerned about that. So let's have a look at gold. This is gold on a daily basis. We've got support at 1717, then 1692, and then 1668 are the support areas that we can look for. Gold finished just a tick above that, so that's an area that we need to watch fairly closely. The RSI getting down towards the 40 mark, so could still unwind a little bit further. If we look at gold on a weekly chart, this gives us a clearer picture of what's happening with gold, but this is just a pullback to be expected in my view. Silver sharply down Friday night. We've broken through this first level at 32.17, and we've got further levels down here, down to around about the $30.40 mark. Now, despite stocks moving down, the stock indices moving down and gold moving down, this is the HUI index. You can see did dip but recovered quite strongly, closed not far off the highs and actually closed in the positive. Let's have a look at one of the other gold indices, which is the GDX index, and you can see exactly the same kind of pattern, and there's actually some pretty good volume in there as well. So that's fairly encouraging, and it's likely that that more positive sentiment will apply to our market on Monday, so I'm not expecting too much downside in our gold stocks, despite the fact that the gold did move down. And the other chart that I just want to have a look at is just the relativity chart between gold and silver. Here's a chart on, this is US dollar gold, the green line at the top, and the HUI index. So you can see there's been a significant bridging of the gap between the price of stocks and between gold itself. And the final chart I want to take a look at is this relative comparison chart between gold and silver. So silver in the blue, gold in the green, and you can see silver had come from significantly underperforming gold, shot straight past it, outperformed gold by quite a margin from around about mid-August. Just recently, however, we've seen a bit more of a pullback in silver than relative to gold, but that's normal. Silver now starting to get more volatile, and I'm extremely confident that over time we're going to see silver move much higher than it is at the moment. So just in terms of overall strategy, my view is we're in a correction now in both the S&P index, which sets the sentiment, and also in gold. It's not really quite clear yet whether we're to the bottom, so wait for the corrections to play out. The stock trends are clearly higher, so we want to be buying the dips, and gold stock trends should also move higher as well. So I think this is probably just a week of maybe just waiting and seeing how things play out. So that's it for this weekend. Cheers.